Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And yesterday I'm bringing you my recap of my European or almost German portfolio for 2021. And today I want to follow up with my recap of my US, North American or nowadays international portfolio. And this is of course the portfolio I talk the most here on this channel. If you're new to my channel and if you like the transparency on this channel and on my portfolio, please subscribe to my channel, ring the notification bell to never miss another video, and then we will see once or twice a week with every transaction I do in this international portfolio. Thank you. So in 2021, 11 companies went out of my portfolio and I bought 9 new companies into it. And I want to go through every of these transactions and just give a short explanation what I did there, so you have really a full recap of everything I did last year. So first of all, let's take a look at the companies I sold in 2021. And the first company I sold in 2021 was Chevron, big oil company. I bought Chevron in the depth of the pandemic crash in March 2020. I bought my first 30 shares for $56.96 at the time, and then bought a little bit more here and there over time, all on these green dots, and then just sold my 38 shares at the time in February 12, 2021 for $91.95. And so I gained around 47% with this trade, which was fine. And the reason I sold at this point was just that the oil price already went up a lot since the downs. When you remember in 2020 there was a point where there was the oil price even in the minus, and then it went up to $65 in February, and then I decided to sell Chevron because I thought, okay, this is a good let's say average price over the last decades, and so I sold my shares in Chevron with a gain of 47%. Quite nice. Second of all, I sold Mastercard. I bought Mastercard on April 20th in 2020. I bought 8 shares for $255.60, and then I bought some more, or just one share, just the dividend I guess, on July 6th of 2020, and then I sold my 9 shares for $379.70 on March 9th of 2021. And since then the price went a little bit more up, but now currently it's at $360, and so it was maybe a good time to sell at this point. And for me it seemed like at the time when I sold that Mastercard is just overvalued. And so this was the reason to sell. Of course, it's a great business, still a great business, but too pricey at this point, and also still too pricey to buy it again. Then I sold Travelers, my insurance company I hold at this time. And my first shares in Travelers I also bought in the pandemic crash at May 21st of 2020. I bought 23 shares and then bought another share in June 10th, just reinvest the dividend, and just the same on September 10th, 2020 I bought another share, and then I decided on April 5th to sell my 25 shares for $151.91. Reason is just the same like with Mastercard. For me it looked like at the point Travelers is overvalued, and so I decided to sell. Then I sold American Express. I bought my first shares in American Express on April 14th, 2020, and then just a few days later on April 20 I bought another 12 shares and then just reinvest the dividend over time here at the green dots. And then I decided to sell on April 26th my 41 shares at the time for $146.77. And so I gained around 65% with this trade. And then you see, then it just went up and up and up and up to almost $190. Now came back to a little bit over $160. So I missed out a little bit, but the same story as with Travelers and with Mastercard. For me, at the time I sold, and even more now, it looked to me American Express is overvalued, and so not a good risk and reward ratio anymore. And this is just the reason I sold. Then I also decided to sell Caterpillar. I bought Caterpillar on May 21st, 14 shares for $112.74, and then just sold my shares on April 26, 2021 for $230.90, which makes a gain of around 105%. And currently it dropped down a little bit to currently $207.33. So also very, very good trade, and at the prices after the double, Caterpillar also just looked to me overvalued, and so it was time to sell. Next, I decided to sell Walt Disney. I bought mainly my shares on Walt Disney on April 13, 18 shares for $101.07. And then it just went up and up and up and up with Disney Plus was coming and so on. And then I decided to sell my 18 shares on May 5th of 2021 for $183.50. So also very nice trade, around 80% of gain. And then currently Walt Disney is trading around $155, so it seemed like was a good moment to sell. Then I also sold my shares in stamps.com. Stamps.com I also bought in 2021, so I put it here in my sales, but I also bought it in 2021. I bought 8 shares on March 8 for $180.50, and then I sold my shares, my only 8 shares, for $323.10 on July 9th. And this, of course, was a very good gain of around 80%. And that had a special reason, of course. Because at the time it just got official that there's an agreement by Thomas Bravo to acquire Stamps.com for $6.6 billion. And so yeah, this was a little bit lucky, of course, the takeover. And then the stock price, of course, just jumped up. And so I was able to sell for $323 and make a gain of around 80%. A little bit luck here and there, nothing wrong with that. Then I sold my shares in Activision Blizzard. First of all, I bought my shares in Activision Blizzard on June 2nd of 2020. I bought 20 shares for $71.94. And then I decided to sell my shares on July 28 for $86.83 with a gain of around 20%. And then you see after that it really crashed down, and now currently we are at around $66. And the reason I sold, and also the reason it crashed so much, is just there's a lot of scandal, a lot of sex scandal. It seems like the management made a lot of mistakes, and this is also the reason I sold, because I didn't have any trust anymore in this management. But now, of course, with the crash to $66 or in a peak even under $60, it's really interesting because Activision Blizzard is a great company. They have big cash flows. If the management could be replaced and very professional management again, this could be a big chance. And so I really think about to rebuy Activision Blizzard. I think when it dropped maybe again under $60, it's time for me to re-enter. So I have it on my watch list, not decided yet, but at some point it's just dirt cheap. Then I sold Wells Fargo. I bought my first shares in Wells Fargo on March 9th of 2020, 45 shares for $33.04, and then a little bit here, a little bit there, another 33 shares on March 27, 2020. Then just reinvest the dividend, and then I decided to sell again on September 1st, 79 shares then for $44.20. And I gained with that around 40%, which is nice. And currently the price, of course, is a little bit higher at $48. So I missed out a little bit. The reason I sold Wells Fargo is just, it seems like they never can end the scandals. And at the time I sold, there were just another problems on the horizon, because it seems like they are just not fast enough to handle all the old scandals. And so I just decided to sell, because I don't really trust the management, even the new management of Wells Fargo. This was the reason I sold. Maybe a mistake at the time, maybe a mistake over time, but I feel better without Wells Fargo in my portfolio. Then I also decided to sell my second oil stock, Imperial Oil, Canadian oil stock. Very, very good company, very good dividend payer, but I decided to sell. So first of all, I bought my first shares, my first 56 shares on May 20, 2020 for $15.35, and then just added over time more and more and more and more, all on these green dots. And then I sold my whole position on October 4th for $33.32, 158 shares at the time. And I gained with that around 120%. And the reason I sold is a little bit like the reason I sold Chevron. Just the oil price increased more and more, and in October it just peaked, and at the time in October it peaked to almost $84, and so I thought this is a good time to sell, because the risk and reward just not good anymore at these oil prices. And so I decided to sell at this point my stake in Imperial Oil. Of course, the oil business is cyclic, and if the oil price come down again massively to maybe $40 or something, oh, you never know with the oil price. You see all the peaks in every direction. Then maybe it's time to rebuy, but this will be not anywhere soon. And so I'm very happy with this trade, a cyclic trade with the oil. So everything fine with that. Then I sold Pfizer. And this is maybe the worst trade. No, this is for sure the worst trade I made this year. I bought my Pfizer stocks, my first Pfizer stocks on February 28, 2020 for $32.92, and then I just added over time more and more and more and more. And then of course the stock went up with the vaccination against COVID and everything. And then it just come down again from $50 to a little bit over $40, and really nothing happened, even if they are these big player in the vaccination game or against COVID. And so I decided to sell, and so I sold on November 5th my 116 shares for $43.69. I gained around 22%. That's okay, that's fine. But just on the day I sold, Pfizer jumped up. Now currently is traded at $59. So I'm really missed out. And this is of course terrible. I just lost the patience, and so I missed out a lot. And the reason they broke out at November 5th is just because they reported for a new antiviral treatment, a candidate which reduced the risk of hospitalization or death by 89%. And then on this day, the rally just starts for Pfizer. And I missed it out because I just sold right before this news. Shit happens. Then take a look at the companies which are new in my portfolio in 2021. And first of all, I bought Progressive Insurance, the big insurance company from the US. I bought my first shares of Progressive on March 9th, 19 shares for $91.09. And then I just added over time more and more. And so I'm quite happy with Progressive right now. It's a little bit in the plus. Very good dividend payer also. So nothing wrong with that. I will just hold for the long term. So far, so good. Then I also decided to buy a second insurance company, Allstate. The first stocks I bought in Allstate was on April 5th, 25 shares for $117.06. And then I added a little bit more pricey. Currently, Allstate is traded at $117, and so the whole position is a little bit in the minus, but also here, nothing wrong with that. I will just stick with it for the long term. Also, Allstate, very good dividend payer, so I'm also happy with this investment, and hopefully it will be fine over the long term. Then I bought MI Homes, the home builder and developer. I bought my first shares in MI Homes on April 19th, 39 shares at $61.30, and then I just added over time a lot. It's really one of my bigger positions. I added here and there some shares. Happy to add at these prices because it really seems like MI Homes is a bargain. As for every other company, I also made a deeper analysis of MI Homes. You find this on my channel or here up on the screen. It seems like this is a big chance and with a great management, and so I'm just happy to add more and more over time. And prices under $60 seem to me really dirt cheap, and so if we come back under $60 maybe sooner or later, then I will even add more and more. And then of course my Chinese adventure started. I started to buy Alibaba. I bought my first shares in Alibaba on April 26, 15 shares for $232.95. And then Alibaba of course went down and down to currently around $120, and I just added over time more and more, and so currently I hold 64 shares of Alibaba, or better ADRs of Alibaba, because you can't buy directly the shares, and the whole position is down 38% or $4,805. Ouch. But of course I will hold Alibaba for the long term. Alibaba is a great business, and of course, there's a lot of problems with the Communist Party in China and with the regulation and the fear of delisting and all so much negative sentiment. We will see how this will work out, but if at some point we come back to a realistic view on the business side of things, then this should be a great investment over the long term. And I invested even more in China. I also bought Tencent. And I also bought Baidu. Of course, Tencent also in the minus 15% right now. Baidu a little bit in the plus. We will see this a little bit later when we look at all the current holdings. But almost same story like Alibaba. Great businesses, way undervalued, at least when you look only at the business side and don't look at the negative sentiment and all the problems and all the fear in the market about the investments in China. There is risk, of course there's risk, but there's also a big chance, and we will see how this will work out. Oh, wish me luck with that. Then I also bought UHS, Universal Health Services. I bought my first shares of Universal Health Services on September 1st. I bought 19 shares for $154.59, and this was maybe not the right moment to buy, because after that it just crashes down to $130, and then I just added a little bit more over time, and now I have 45 shares of UHS, and I'm down 6.43%. But also here, very good company, very good management. I really trust them. They seems very cheap, and so I think this will be a good long-term investment. Next up, I also bought Snap-on. I bought my first stocks in Snap-on, which I had on my watch list for a really long time, but was just too expensive. But then I bought my first shares on October 21st, 12 shares for $216.14, and then just added a little bit more here and there. And now currently they trading at $215, so I'm a little bit in the minus. Nothing really happened here yet. I'm quite happy with this investment, and I think it will be great over the long term. Also very big trust in Snap-on. And last but not least, I also bought some shares in PayPal. I bought 25 shares on November 22nd of PayPal for $186.28. And so now currently I'm up a little bit because the stock price right now is at $188.58. So nothing really happened here. PayPal, great business in my view, with an unbelievable market position. It just dropped immensely lately. I also made a video about that, a deeper analysis. You'll also find this on my channel. Check this out, where I go through the whole business model and also calculate the intrinsic value, as I did for all of these businesses. All these businesses which was in my portfolio or are in my portfolio, you find a deep analysis on my channel. Feel free to check this out, and if you find any value in that, then just subscribe to my channel, follow me, give me a big thumbs up. This helps my little channel a lot. So this was the last buy in 2021, and next to that I also added to my already positions in my portfolio. I added to my Intel position, to Jack Henry, Berkshire, Meta or Facebook, Leggett & Platt, and also to Electronic Arts, because all of them for me just great businesses, and I will hold them for the long term. All of these transactions, my current portfolio look like that. I have a lot of cash left, over 28%. The biggest position in my portfolio right now is Facebook or Meta, followed by MI Homes, Intel, Berkshire, and so on. Then take a look at my performance. This is maybe why you're watching this video. So now we come to the numbers and the performance in 2021 and overall in my portfolio. So in 2021, the Bank of Nova Scotia, or Scotiabank, was the best performing stock in my portfolio with 37%, followed by Berkshire Hathaway, JP Morgan, Progressive, Coca-Cola, and so on. And of course at the end, Tencent and Alibaba, just terrible. And with that, my performance in 2021 was 13.24%, which is an underperformance to the S&P 500, a big underperformance to the S&P 500, which had a performance of 26.89%, and a little bit of underperformance to the Dow Jones. And of course, when we look here at the chart, we see mid of the year everything was fine, and then I decided to invest in China, and then the performance really declined, and so overall there is this underperformance. This of course is in US dollar. Since I'm living in Euroland in Germany, let's take a look at the performance in euro, and this is a different story. In euro, I'm almost perform like the S&P 500. In euro, the performance is 23.28%, just because the euro is so weak lately. So this is, for me personally, maybe the more important number, but of course the currency exchange rate, this is of course a speculation, and so this can also fire back very fast. We will see how this will work out. Just show you this because it's very interesting how much influence the exchange rate have for international investors. Then take a look at my current holdings and the performance since the start of the 2nd of December 2019. And there you see the Bank of Nova Scotia, or Scotiabank, best performing stock with 95.23%. 2%, followed by JP Morgan, Coca-Cola, Berkshire Hathaway, and also here at the end, of course, the Chinese stocks Alibaba and Tencent. And then just to make this complete, here also my closed trades, all my closed trades since the start of this portfolio at the 2nd of December 2019. And there you see Imperial Oil, the best trade I had, followed by Caterpillar, Walt Disney, Stamps.com, and so on. And so overall the performance since the start at the 2nd of December 2019 of this portfolio is 60.29%, which is an outperformance to the S&P 500 of around 7% and of the Dow Jones of around 30%. And that's of course fine. That's in US dollar, of course. So that's it for today. This was kind of a fast run through the year 2021, even if it lasts a little bit longer today. I wish you a happy new year, a successful 2022, and of course, also as last year, you will get an update every weekend on this portfolio with all the transactions I do. And if you like this idea, if you like this transparency, just follow me, subscribe to my channel, ring the notification bell, and then you will get all the informations on my portfolio. See you then. Take care. Bye bye.